Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are here for Monday market moves, what happened last week in the markets, and what I expect for next week. As you can probably tell by the background here, we're traveling, so this is going to be a little bit briefer than usual. We have the finest that the South Point Casino Wi-Fi has to offer, so we got to keep it a little brief. Also, the market is going to be closed on Monday because the market is like your bank. It is never open when you want it to be. All righty, let's go to the charts. Starting out as always with the S&P 500. We are just getting ready to tap on new all-time highs, I believe. I think this will happen next week. It's looking to me like this is going to just pop, probably pierce that bubble again and get another new all-time high before it rolls back over. Time will tell. The dollar, the DXY, has rebounded slightly from its low down there at the bottom of that purple box. Fully expect this to go down around 90 in the coming months, especially when the Fed starts cutting. But yeah, had a little bounce down here around 150, something like that. But there is some downside support down here right around 99.50, 99.60 or so. But it had a little bounce. The hedge that we basically took was we sold some of our gold because as the dollar gets stronger, then gold is going to go down, and vice versa. So it did hit the bottom of the box and bounced up there. All righty. And the 10-year minus the 2-year yield is just about ready to exit Clown World here. And so we're going to exit upside down Clown World. I think this will happen next week or the week after. The Fed has basically forecast that they are going to cut rates, and they said they're going to do it on September 18th. So that's essentially, 2 weeks and a few days later. So when that happens, then we should get back into normal times, and then we will enter the recession. 1 month treasuries. Now, this is interesting. Okay, so for a long time, we were just closing every single week at 5.38%. And then last week, it got to 5.34. And look at where we are now, 5.27. So this year and a half or 2 years that we've been enjoying of north of 5% for a 1 month treasury, I think is coming to a close. This will probably continue to go down, especially as the Fed starts cutting rates. And gold closed the week at 2,527. So still north of 2,500. It is down 0.75% for the week. And when we plot gold divided by the S&P 500, we're not quite at that 50% ratio that we're looking for just yet, but I think we're getting close. The S&P outperformed gold by about 1% this week. So the ratio right now is 0.447. And GDX is down 1.8%. Took a little bit off of, this is some of the gold that we sold was a little bit of GDX. So took a little bit of that off the table. Not a lot. I think we sold 10 or 12%, something like that. Yeah, it's down 1.8% for the week. As far as next level of like major support that I see, we've got a little bit of support around 36.50 or so, but the support that I see that, I might be willing to bet on would be kind of down here in these low 30s, like maybe 33 or 34 bucks a share. And GDXJ, same kind of thing. Took a little bit off the table there, not a whole lot, but just something to free up a little bit of cash to get that cash back up to 20%. And it's correcting now. Next level of support that I'd be willing to bet would be around 41, maybe $40. Watch this 200 moving average as it's rising here. And if you can time that with some of these back supports back here around 40 or 41, I think that would be a sweet spot entry. And Gold Royalty Corporation down 5% for the week. But I think we're into a little sweet spot here. This has kind of sold off a little bit since the Varus deal with their tailings news came out. Would have liked to catch it back here around in the 120s, and I thought I had a limit order back there, but I didn't. Or if I did, it didn't hit. But I think a limit order, if you were to buy it now, that's probably fine. I think it's cheap enough. But as far as a technical entry, I think 120 to 121 would be a really nice sweet spot right there to line up with some back support for a technical entry. And Origin royalties. Okay, this one went up 14% for the week. I was on the Peter Granite show last week. I put a post up to check that one out. Anyways, I misspoken there. I was saying that Origin royalties had a 1% royalty on the Agnico Eagle mine, and it was the Anglo mine, not Agnico Eagle. But anyways, semantics. Anyhow, they shot up. This stock is looking fantastic. I think we're getting pretty close to where we're probably going to want to take some profits. And our upside target on this one is $1.33 a share. It closed the week at $1.17 a share. So getting really, really close. And Barrick Gold is down 1.5% for the week. I think this one is going to perform a lot better this next quarter than it did this last one. Looking as far as like an entry point here, we're talking about $16 and $16.25 for a long time. Had a lot of those. I know a lot of you guys got in right around here. And still kind of like those levels, although I don't think it'll get down there. I think we're going to need to get gold whacked probably down to below 2,300, which I don't think will happen. But as far as a technical entry on this, we want to see these technicals start to get sold off. RSI is way too high here. For a lot of these gold stocks right now would be the time to be selling, not necessarily buying, except for Barrick. I think Barrick's pretty cheap. Newmont is up 2.6% for the week. One thing I noticed on this one is we are above the 200 weekly moving average right now, which is pretty fantastic. So looking very good for Newmont. Like this one a lot. I don't see any buys right now into this. I think the buy zone was back here when everyone hated it. Now it's becoming tolerated and even loved. But as far as your next level of resistance, you have a decent amount now, lining up back here from January of 2023. But as far as a technical entry, now I'd be looking for anything maybe around like the low 40s. That might be a nice technical entry on that one. And Agnico Eagle, this one is performing fantastic. This last week, though, it's down 1.6%. But I like this one a lot. This is probably my favorite. I pay a dividend. It's about 2% or so. Yeah, love this company a lot. If anything, though, I think we might be taking a little bit of profits here, kind of around this upward range right here. Don't see any technical entries into this at all. We want to see this come back down to like 70 bucks a share or so to line up with any kind of support. But who knows? Maybe this will just grind sideways for a few months, and then that might actually create a little bit of an entry if we get some sell-off here in the RSI, or get some downward pressure in the RSI. B2 Gold down 2.5% for the week. Looks good now, fundamentally for an entry. We had an awesome presentation by Joe Mazumdar, and he came up with 3 stocks that he thought were very undervalued even after this gold bull run. And that was in the Rule Classroom Plus. Be sure to check that out. There will be a link down in the pinned comment below. And one of the companies that he talked about was this one right here. And so I don't own this one, although I'm seriously considering it after his presentation. I'd love for you guys, anyone that saw it, to put down in the comments what you thought. But a pretty compelling argument. So as far as the technical entry here, I mean, we're right on the 200-day moving average right there. Let's see what it looks like on the weekly here. Okay, close below the 50 weekly, but we do have a pretty compelling upward channel trend line right here that was broken for a hot minute by that yen carry trade. That was a gift to anyone. I know you guys have been asking me about this one for a while, and I've basically said $2.50 looks pretty good. And we've had multiple times where it's hit that. Maybe it'll get down there again. After the presentation that Joe gave, I don't know that it will. But anyways, he seems to think it's pretty cheap here. As far as a technical entry, though, I mean, look at the RSI. Let's see what RSI is at here. RSI is at 50, so kind of middle of the road. I'd be more inclined to be patient and wait for a little like touch of this upward channel trend line right here, and that might be a nice time to snag it. G Mining Ventures up 2.5% for the week. What's exciting about this is the story on this one just keeps getting better and better. And on top of that, we got warrants expiring here in like 2 weeks. So I drew this little circle here to remind us that there's probably going to be some selling pressure leading up to these warrants expiring. And that may coincide perfectly with this upward sloping 200-day moving average. So if you can get some limit orders, if you guys don't, I've been in this thing for well over a year, and I'm not looking to get any more. But if you can get some on and time it with this 200-day moving average, I think that'd be a really nice entry point. And silver is down 2.3% for the week. And even though it's down for the week, it's looking fantastic on the charts. As long as we maintain above $26 in silver, we're going to have a good time. So what we do not want to see is we do not want to see a weekly close below 26. If we saw that, that would be pretty bearish, and that would be what George Gammon would call stiff drink time. Okay. But as long as we continue to maintain daily and weekly closes above 26, then we're going to have a good time. On top of that, we got this upward sloping 200-day moving average, which is looking fantastic. And hopefully we come back down and just kiss it and then come right back up. That would be a nice little entry point. And the way I would play it would be SILJ. I missed this moment in time right here, and that was a bummer. But I think we might get another one. Hopefully it comes back down, touches it, and then we can make a nice entry there on SILJ. SILJ is down 3.9% for the week, and I hope it falls further and does just like I said. We shall see. Pan American Silver down 5.25% for the week. Would like to see the same thing with this. Would love to see like a double bottom right there on a rising 200-day moving average. And yeah, that would be a fantastic entry point. And I think anyone that's wanted a position in Pan American Silver, that would be the time to get it. Copper, paging Dr. Copper, up 0.25% for the week. This is looking really good on the charts here. I'm liking that copper is above the 200-day moving average right now. The 200 moving average is continuing to just slightly slope up like that, looking like it's trading right in between the 50 and the 200 moving average. We'll see how this one irons out. RSI is middle of the road, but it is sloping up and it's staying above that yellow line right there. So as long as it continues to do that, this will be bullish. Copper, COPX, our favorite copper miners ETF, basically, you know, just an exaggeration of the copper chart, but this one looks really good as well. It's above the 200-day moving average. I would love to see this get sold off. Maybe copper will get sold off to, you know, $4, $3.80, something like that. That would give us another entry point like we got right back here, and we could snag it again at around $38, $37. COPJ. Okay, so the Junior Copper Miners ETF. This one's fantastic. Would like to see this also get sold off and come back down to like $19.50. This would be a great technical entry in my mind. We'd have a nice little double bottom. It would be around the 200-day moving average. But you know, this is a very leveraged way to play copper. You know, if copper goes up, this is going to go up even more. And if copper goes down, this will go down even more. And uranium. We just had Justin Hune, our resident uranium expert, back on the show. He is bullish as ever. He agrees with this little white line that I drew here for a floor for uranium. And although we tapped 80 cents below it to close the week, not worried at all. He thinks that there's going to be lots more contracts coming online. There has been 42 million pounds of uranium sold so far this year, and the utilities worldwide on average need about 180 or 200 million pounds. So a lot more purchasing has to take place in between now and December, and that is probably going to be taking place here in the next few months. SRUUF, the Sprott Physical Uranium Trust. This one's down 2.3% for the week. They are now trading at an 8.67% discount to net asset value. Once this gets up to, premium or close to it, maybe 1% discount or something like that, we might trim this position a little bit. This is just a really nice place that I like to store cash. When you see a discount, north of 12%, it's tough for me to not trade dollars for that, because I think it's a fantastic storage of cash. URA, Global X Uranium ETF, is down 3.4% for the week. Looking pretty good on the charts. Maybe we'll get another yen carry trade. I think there's still a little bit more to unwind from the yen carry trade. I think that the yen will get stronger. I think the dollar will get weaker. Although we recently had the bounce in the DXY that we just saw, I think that's probably going to unwind a little bit more. Not necessarily next week, but I think in the next month or two, there's probably going to be some more of those margin calls, and that'll probably give us some more entry points here in these equities, and you might get another entry like that into URA. And I wrote $25 here. If you just bought it at 25 bucks and kind of forgot about this for the next couple of years, I think you'd do fine. But as far as a technical entry here, we want to put a limit order down here around 23 bucks, and that would line up perfectly with this. URNM, got a limit order in down here for $38, just lining up with back support back there. But same kind of thing. Want to see this come in for a double bottom. URNM is down also 3.4% for the week. And as far as trading this and exiting the position, I think up here you could start to take some profits. That would be around $59, $56, and that would just be lining up with some back support right back there. URNJ down 4.2% for the week, but charts looking pretty good. Just making, we made another entry on this one 2.5, 3 weeks ago, and around $20 I think is fine. But if you want to line it right back up, double bottom right back here. Hopefully we get another unwind of the yen carry trade around $17.40, something like that. I think would be a really nice limit order. And crude oil down 1.7% for the week. Shot up and then came back down. We might be getting I guess that'd be a triple bottom, since we got one here and another one there. Coming in for a third one, I think. I think next week we might get it. That would bring it down to like 71.75, 71.50, something like that. XLE, our favorite oil ETF. So just kind of trading in this 38% retracement to the 50% retracement in that zone right there. We now have the 200 moving averages sloping up, which is fantastic. But I think that, if you don't have any oil, now is fine to enter. And this is about the dividend that you would get around, little north of 3%. So maybe like, I drew these things 6 months ago. But this was the first entry. That's the second. And that price point is at 88.65. Third price point would be 86.25. And fourth price point is way down here that probably won't hit unless we get a liquidity crisis. Then we'll get lucky. And that one is at 79.75. But yeah, like this one a lot. Easy beta play on oil. And notice too that crude oil's down for the week, and the oil equities are actually up. ExxonMobil's up 1.4% for the week. This to me looks like a bear flag, but maybe I'm off. Maybe it's not. Yeah, maybe I should get rid of this. But I think Exxon's fine to buy now. I just want to see a little bit more technical sell-off. I'd like to see this come back down to the 200 like it did down here when we bought. I'd like to see it come back down here, and that would be around 111 or so. I got limit orders down here for 109.50 and then 101. But, if it got down here, I would buy. I would just move this up from 109 to 111 and get it. Natural gas is up 5.2% for the week. So we had a really nice double bottom. Check this out. So it went up, came back down, and touched right there. So, I mean, lining up almost perfectly, almost to the penny. Right back there, 187 up, bam, down. And look at that. If you snagged it right there, come the very next day from Tuesday to Wednesday, you were a happy trader. Devon, our favorite way to play it, DVN is up, what is that, 0.2% for the week. As far as technicals entries, I don't really see any. See, look at this yen carry trade right here. Man, look at that. Got down into below 41. You know, a limit or, you know, if you just buy Devon now, you're fine. You know, that's about the price point. I think my average price on this is like $44 or $43. But just because I bought so much when it was down here at 41. But yeah, Devon's cheap now. It's fine. I don't even know that I would bother too much with the technicals here. It's cheap as it is. Coal, thermal coal closed the week at 145. Met coal closed the week at 201. So still down here around $200 per ton for met coal. And our favorite coal ETF. Okay, so we bought some more of this. I think it was last week, right? Yeah, we bought some more on Monday of last week and Friday of last week. And they got one more limit order in here for 21.85. Maybe we're just being greedy. What's the difference between 21.85 and $22? Pretty much nothing. 15 cents. Should probably just buy it here and just be done with it. But like this one for a beta play on coal a lot. And for Glencore is down 2.6% for the week. We have Matt Warder coming back on the show, our coal expert. He is coming on, I believe, September 3rd. And so there is going to be in the community tab after this airs. Make sure you go to the community tab and check out the submit questions for Matt Warder. Submit your coal questions. Ask any coal company you want, and we will ask our coal expert. So Glencore, yeah, limit order, same kind of thing. You know, yen carry trade bounce right down here, like $9.75. Don't know if it'll hit. I think Glencore is pretty cheap as it is. They just paid a dividend right now. Not fantastic. It's only 11 cents. So I think that only irons out to be, what is that? Just a couple percent or something like that. But like this company a lot, as soon as they pay off their tech acquisition, then this thing should do quite well and the dividends will resume. BTU Peabody. Okay, so this was kind of our trading one here. We just closed our position in BTU. Basically, the game is buying this at $21.50 and then selling it around $23.50 to $24. And that's pretty much it. Just running options on this thing as soon as you can catch them. But you know, if you want to be in long term for this thing, the dividends aren't fantastic. But you know, kind of pretty predictable, almost like Rio 2, like Charlie Brown shirt pattern here. And I think we made out after the dividends like 10%, something like that. Platinum is down 3.5% for the week. Closed the week at 932. And our favorite way to trade that on the stock market is PPLT. Okay, for this one, still just going to want to wait and be patient. Get, you know, pick this thing up around 79 or $80 a share. Palladium closed the week up 2% and closed at 961. Got a lot of baseline support for Palladium around $860, and that'll equate on this PALL, that would be a share price around $79 or $80 as well. SPPP, that one is like, you know, I like buys around $9. You know, there's moments in time here over the last six or 8 months where it's gotten down to $8.75. So maybe another limit order for that. I think we're going to continue to see weakness in platinum and palladium until Russia runs out of it. And nickel is, hang on, there we go. Nickel is down 0.1% for the week, but love seeing charts that are just in the toilet like this. And the way we're playing that is the easy beta way to play nickel, NIKL. Getting really sold off down here. You know, maybe another limit order just like back here for like $11.30, 40 cents, something like that. I don't know that it will get there. But if it does, then you'll be glad you had it. And iron ore is, let's see, close the week around 100. And BHP, iron ore producer here, is down 0.1% as well. We've got, I've just been buying this thing at like $55 for the last like ever. They pay pretty good dividends. Cheapest I got it was back here at 48. But like this company a lot. I think they're going to be doing very well in the commodities bull market. And yeah, they pay good dividends. I think they'll do fine. And I also think Rio Tinto will do well. This one, we might start to use this as more of a trading vehicle. I mean, I should have gotten this one right here. I should have caught that. I didn't. But kind of predictably, moves from like $60 up to like 70 to 75, back down to 60, 70 to 75. And look, it's following the patterns of these earnings and dividends. So, I could definitely see a scenario where you could trade this thing in and out like that, maybe even running options on it. And PICK ETF, Metals and Mining Producers Fund. I like this one a lot, especially for your guys' retirement accounts where you can only buy ETFs. I think any limit orders down here around $36, $37 line up really nice with some back support. And I think those would be good entries. And Bitcoin is, let's see, where is it now? Right now it's at 58,000. That's down probably 9 or 10% for the week. What is that? 8.75% for the week. As far as any patterns here of like what to expect, I'm more curious than anything else how this thing is going to perform in the coming recession. I think it'll get whacked, and I hope it does not. I hope this is actually the people's money. I don't think it is. I think it's tulip mania. I think people are basically trading air, although I do have Bitcoin, just in case I'm wrong. Just in case I'm wrong. But I don't think I am. But we'll see. Who knows? I don't really have a bias to the upside or downside for next week. Probably more downside, actually. We do have an upward sloping 200 moving average, but some of these technicals here, the RSI has fallen below, and I wouldn't be surprised if we fall down into the low 50s next week. And next week, I'm going to dive into cobalt. I didn't get a chance while I've been traveling to do that, but thank you guys for putting all the cobalt companies down there, giving me some material. I'll pull those up next week on Monday Market Moves, and we'll do a deep dive. Remember to submit your questions for Matt Warder under the community tab, and we'll talk whatever coal companies you want. So thank you guys for being here. Thank you for all your support, and be sure to support the show and share this with anyone that you think needs to hear it. It's probably your buddy that can't stop talking about tech stocks. You have yourself a great rest of the day, and we will talk to you next time.